Very warm welcome and a very good evening to everyone. We'll start at sharp 5:05. So, requesting all of you to stay along with us. We'll start in 5 minutes as we are expecting more participants. Good evening and welcome all to part 4 of our transfer pricing series, Decode, Benchmark, and other key topics. I know this session is between you and your Eid break, but we will try our level best to make it worthwhile for all of you. Can we have the next slide, Astha? Given that TP was so crucial and so new for this region, what we had decided is to break transfer pricing into a 4 series webinars for you all so that we can cover each series extensively. And today, this marks our last session of the transfer pricing series. And therefore, what we aim is to cover everything what is left. And for this reason, we have kept a 30-minute Q&A session towards the end. So please utilize that Q&A session to ask all the doubts you have. You can also type your questions live on the chat box and we will try to answer them. So without further delays, let's have a quick recap of the past 3 sessions which we have taken. Can we look at the myths, Astha? Below are the 6 myths which we had broken for you in the first session. I will just quickly take you through all of them. The first myth was everyone has to do TP and comply with ALP, irrespective of the size. Second myth, which is the most common myth, is TP is applicable on domestic transactions. It is not just applicable on international transactions. Third one, TP is applicable for transactions entered during the year, irrespective of the fact that whether they are squared off during the year. Fourth, and an important one, auditors aren't going to help you in complying with TP. In fact, they would not sign your report unless you produce that transfer pricing policy document which they are looking at. And the last one, TP is important. It is important that we do transfer pricing alongside our businesses and not wait for the last moment. There was another myth on TP documentation, but given that we have covered it extensively in our webinar, can we look at the day 2, Astha? We decoded the TP documentation in session 2. Out of what is there on the slide, I would say local file would be the most critical one because I know there is a limit of 200 million dirhams to be complied with. But even if you don't meet that AED 200 million dirham threshold, local file is a file which would comprise of your benchmarking reports, your agreements, and any other files which you want to keep to support your arm's length principle, to support the ALP of the transactions. And as we had discussed, maintaining your transactions at ALP is absolutely mandatory. And therefore, even if you are not supposed to maintain a local file if your turnover is below 200 million dirhams, you will anyway have to maintain everything which is required in the local file because what you will require is to demonstrate that your transactions are at ALP. Having said that, reporting is only required when you meet the certain thresholds. You remember the 44.5 rule? So reporting is only required when you meet the thresholds, but compliance with ALP is still mandatory. Nothing has to be filed with the federal tax authorities for now. It will only have to be filed once it is requested. But once it is requested, we will get only and only a period of 30 days to file it. So it is extremely critical that we maintain it right now and not wait until the last moment. Next slide, Astha. TP Homebound. It has been one of our favorite sessions personally because what TP Homebound covered was how transfer pricing is performed in this part of the region. And few important key takeaways from this session was that even your local transactions would need documentation support. If you are entering into any intra-group services, the services can be high value service, which would warrant a markup. The service can be low value service, which can have a blanket rate of 5%, or it can be mere reimbursement without a markup. But how we characterize each service is very important and then deciding on the next course of action. So now we are here at our 4th session, and I would call this 4th session as an extension of 3rd session, as today we will decode What is the benchmarking process to be followed? What are the typical UAE transactions which are undertaken in this part of the region and how they are benchmarked? We would not deep dive into the benchmarking methods which are to be followed, as that would get too technical, and of course I have to leave something for the consultants to do, right? I cannot spill all the sauces. So yes, we would not get into the benchmarking methods, but yes, we would definitely guide you all on what are the typical transactions and what are the typical methods which can be used for those transactions. And lastly, we will see how the transfer pricing disclosure form, which is to be filed alongside the return of income, which forms a part of the return of income, looks. And most importantly, we will also perform a walkthrough of the local file and the components of the local file. We do want to save some time for extensive Q&As at the end, so let's start today's session. But before we begin, I want you all to tell me something. What is that one transaction which you have struggled benchmarking? Please open the chat box and type your responses. We would like to know what is that one transaction which you have struggled benchmarking so that we can focus on that transaction during our session. At least I can have a response saying we have struggled benchmarking KMP, because what we've observed, yeah, see, there you are, management remuneration. Sponsorship fees, okay. Management remuneration. What else? Any other? Okay, then let's start. Let's start. Over to you, Iti, to take them through typical uh, type of transactions as well as the benchmarks which we generally do. Guarantee fee. Okay, let's we should take this towards the end. How to take up the guarantee fees, because this has been a pressing point not just in UAE but across the world. So yes, we'll take that up. Over to you, Iti.
Thank you, Kinjal, for that crisp and impactful recap. It has really set up a perfect platform for a deeper and more insightful discussion. So let's kick things off with the basics of transfer pricing. Whenever two group companies transact with each other, the $1 million question is, how do we make sure that the price is fair? Because remember, just because you're having a family deal doesn't mean it gets a family discount. That's where the arm's length principle comes in. It simply means treat your group company like a stranger. Asta, can we see the next slide? If you were selling this service or product to an unrelated company, what price would you charge? But how more important question here is, how can we prove that the price we charged is fair and not inflated one? The answer is benchmarking. Benchmarking is like a superhero for your company. It helps you to prove that your prices and payments between group companies are fair. So, whenever the FTA knocks in, benchmarking is what protects you. It gives you the evidence you need to show that you are not undercharging, overcharging, playing favorites. In short, benchmarking is the savior that keeps your structure compliant and your story credible. So let's explore this procedure and see how this process works in real life. Asta, can we move to the next slide? Thank you. So let me make benchmarking super relatable to you. Imagine you are a kid again. You and your sibling got a chocolate bar from a mother. The first thing you will do, you will divide it into halves. Not so fast, because you both inspect each half very closely. Hey, you got the bigger piece. That's how negotiation begins. Maybe someone brings out a ruler to check the length of the piece the other sibling got. Maybe it ends in tears. That's, my friends, is benchmarking at its rawest and most emotional form, making sure that everyone gets a fair deal and no one gets more or less. So let's use the same logic to break down the benchmarking process in the corporate world step by step with chocolate still in mind. So the first procedure is to understand the transaction. In this step, we need to see that what we are dividing. In chocolate world, it is the chocolate bar. But when it comes to real world, we need to see whether we are providing services, goods, loan, or maybe intellectual property. Without clarity on what's being transferred, the whole procedure can go wrong. Once we identify that what we are transferring, we need to select the tested party. So, in the story which we discussed between you and your sibling, probably the target party would be the one who isn't doing the cutting, the one who is hoping and sitting quietly for the fair piece. In business, we do the same. We pick the simpler, less dominant party. Usually, the entity with routine functions and lower risk becomes the tested party. Now, once we understand the transaction and we select the tested party, we need to find the similar independent companies. It is just like a detective work. It is like glancing at your sibling's chocolate and thinking, hold on, is his piece bigger than mine? In benchmarking, we look at real companies in similar situations, same market, same functions, same size. We want to know what do unrelated parties pay or earn in similar deals. Now that we have found the similar independent companies, we need to see that what are the margins or prices the unrelated parties are charging. So in the chocolate world, you can say that your sibling got the bigger half and you got the smaller half. In business, this third party company earns a 7% margin, but we are at 18% margin. Why the gap? If your pricing or the margin is way off the industry average, then it is a red flag. Unless there's a justifiable reason like added risk or complexity. Finally, after all these steps, you just in your childhood, you ran to your parent saying that, see, I got the smaller half. In transfer pricing, we need clear documentation. We need to show how we arrived at our numbers, what data we used, what comparables we selected, how we made adjustments, and why our price is fair. The documentation is what protects you during an audit. Vasta, can we see the next slide? Now, it's the time to look at one of the spiciest and most talkable topics in the UE, that is KMP benchmarking. For explaining this, let me set the scene. You are the owner of the company. You are also the director. You are playing multiple roles in the company. You are the deal maker, you are the visionary, you are the strategist. You have worked hard to build your company. So it makes sense to reward yourself, right? And so why not? There's no personal income tax in UE. Whatever you pay yourself, you take home 100%. Sounds like a dream. Well, not. Here's where the tax authorities begin to look in. When you pay yourself a handsome salary, it is technically reducing the taxable income of the company. It is just like profit shifting from taxable company to a tax-free individual. So to reduce this profit shifting, KMP benchmarking is required. But here's a trickier thing. There is no official UAE guidance on what's considered too much, on what considered fair when it comes to paying directors, founders, or KMP. So the question here becomes, how do we prove that the compensation is fair, not inflated? At MICS, we don't leave it to guesswork. We take a prudent, evidence based approach. We work with independent HR consultants to get market aligned salary benchmarking reports. These are not broad industry service. We look at sector specific data, roles with responsibilities, then company size and revenue bands, and even geographic benchmarks. This way, we are able to confidently say, look, this isn't a luxury payout. It's a competitive, market aligned compensation for someone in this role, in this industry, at this scale of business. Asta, can we move to the next slide? Finally, let's talk about a transaction that seems simple but can get complicated very quickly. Intercompany loans. Let me bring this to life with another family analogy. Imagine that the parent company is like an older sibling who's lending money to its younger sibling, the subsidiary. The intent is good. The money stays in the family. But here comes the big question. What interest rate should you charge? If you say zero, the tax authority are going to raise their eyebrows because it looks like you are giving a free benefit to the subsidiary. And obviously, it will reduce the parent's taxable income. What if in another situation you say the interest rate is 25%? They will frown even more because now it seems like you're artificially inflating the parent company's profit. Perhaps maybe a situation where you are shifting income to a tax friendlier location. So, what's the right answer? How can we decide that what is the fair interest rate? As always, we go back to our savior, our superhero benchmarking. Because even if it is a loan between siblings, you must price it as if it were a loan between complete strangers at a bank counter. So here's how we do it. Firstly, we have to select the borrower as tested party. We need to focus on the borrower sides just like the bank does. Because lender is typically not engaged in lending business, so making borrower as a tested party seems simpler and appropriate. Then we determine the credit rating of the borrower. We basically in this step assess whether the subsidiary is credit worthy. We analyze would if what if subsidiary goes to bank, would a real bank lend to them and at what rate? Once these things have been identified, we conduct comparable loan search. So we look at loans of similar size, terms, currency, and region. After looking at all these three steps, we adjust for credit risk. So if the borrower's risk is higher, the rate goes up. Lower, it goes down. And finally, we determine the arm's length range. We come up with an acceptable interest rate range using real data. For example, the real data indicate that the comparable companies paid between 4 to 6.7 percentage. If we price our loan within this range, we are standing on solid ground. So this is all about that how we benchmark intercompany loan in simpler words. So we have walked through key areas like KMP compensation, intercompany loans, and how benchmarking helps ensure pricing is fair and defensible. But these are just tip of an iceberg. In reality, group companies engage in many types of transaction like service fees, sale of goods, royalty, and lease agreements. All of these requires benchmarking too. To walk you through these other common intercompany transactions and how to approach them practically, I now hand over to my colleague Astha. Astha, over to you.
Thank you, Iti, for explaining this important cases. Now I'll take further. So let's move ahead with the case of sale. So this is the case of sale of goods. So it's a toy distribution setup. So imagine company A, which is a parent company, which makes the toys and sells them to the bulk in bulk to the company B, which is a distributor. Acting as a distributor, company B is selling toys to the customers. Now, since the distributor is not doing anything too complex, it's not designing, it's not manufacturing, so we can treat company B as the tested party, being the party which is assuming less risk and performing the limited functions. That means we'll check if distributor is earning fair profit or not. In the toy business, demand is mostly steady. The products are not that unique. and product prices do not change a lot. I mean, not so frequently. So we usually look at the gross profit margin, how much the distributor earns before its operating expenses. This margin should cover its day-to-day costs and give a reasonable profit. But there's a catch. Comparing gross profit margin is not always easy. Different companies record cost in different ways. Some items they may treat it as a direct cost. Some items they may treat it as a indirect cost. So this classification makes it comparison very tricky. So in that's when we need to consider which transfer pricing method fits best for the benchmarking in each case. So it's a fact specific and case specific exercise. Even a single fact, if it is changing, then also it may change a whole lot scenario, and tested party and benchmarking and characterization of entity will change. So always do not try to have a similar model, like the person is I have another company, it is following this model, so we'll follow the same thing. It is a fact specific and it will depend on each and every case. Let's move ahead. Let's have a different, like similar different setup in which product will get changed. So similar setup will be there, manufacturer, distributor, and customer. So the same pattern will be there, but it will be the case of the sale of jewelry. So now let's see how it will uh, play the this small change will play the role in benchmarking, and how do we do this. So here's a company A again, who is a manufacturer and parent company. Company B is the distributor. The distributor simply buys and sells. They are not involved in crafting, designing, and preparing the jewelry pieces. So that's why we treat the distributor as a tested party. Same case, but they are simpler, less risky part of the transaction. But unlike toys, jewelry business is not a straightforward. Demand changes with the season, fashion, events. The products are highly customized. No two pieces are usually exactly the same. And most importantly, metal prices fluctuate, especially gold, silver. Let's say company B is buying jewelry when gold prices are high, like during the festive or peak demand seasons. But our comparable company might have operated when gold prices were much lower. This could be the scenario. Now, since we do not have the detailed time matched public data for a comparison, it is highly is impossible to have that data, especially showing when exactly they are making their sales. Comparing gross margins will be highly unreliable. Like we did in toys case, we did the gross margin comparison, but here in this case, it will be the it will be not the same case. Let's say company B is buying now we do not have that data, right? So gross margin becomes unreliable. Even small product pricing difference can throw off the comparison. So instead we look at the net profit margin, which gives us the clearer picture how much the distributor actually earns after covering their costs. And how do we check that net margin is fair or not? We can use two sets of data, that is internal data or external data. For example, if company B also distributes to the uh, un, uh, unrelated customers, we can we they are buying from unrelated customers. Sorry, my mistake. So if company B is also purchasing from the unrelated customers, we can compare those margins. Even for how do we do for the external data? If internal data is not available, then definitely we have to look at the databases, and we have to run a search process, search strategy. This is really a technical one, so I'm not going into that much detail, because that will be taken care by your consultants. And if all this still doesn't fit in the specific case, that's when we step back and consider other transfer pricing methods that might work better. We need to see other options. Let's move ahead. Benchmarking for exploiting intangibles. Like, let's look how we figure out fair royalty rate when group companies use brand owned by their head office. So assume in this case, MNC headquarters own the trademark, and companies, as you can see, company A, B, C, and D are using that trademark to sell the products in their local markets to ensure the royalty paid, because it's a classic case of using the intangibles owned by your parent company or a group company. So you are if let's imagine if third party would be there, if you are asking them to use their trademark, they will charge. Definitely they're not going to give you free of cost. So in similar way we have to set up a pricing. How do we do this? Using benchmarking. Let's see. So to ensure that royalty paid is fair, we use the data from third party trademark license agreements. Basically what unrelated companies pay to use the similar brand. Now here's the tricky part. The head office is usually a complex business, so it's hard to find an exact match for comparison. Like similarly, if you are going to see tested party as a headquarter, so you'll be like, they are giving it to other companies. So why not we treat headquarters as a tested party? But it will be a like difficult to find. So what do we need to do? We need to go by a transaction by transaction approach. So what is that? Let's understand. That means we will compare each intercompany license agreement with the similar third party deals. Like we'll see the same industry, territory, duration, and adjust the differences like contract terms and market conditions. So to arrive at the arm's length range. Now that is the important, since we have a company in the different jurisdiction. Company A is in some another other jurisdiction, B in some other. So what do we need to do? We cannot apply single royalty rate across all. It could be differ from geographic location to location. So in this case, we need to perform 4 separate benchmarking analysis, one for each company, because each market may have different pricing trends, risk, and comparable data. In short, we tailor the benchmarking to fit each specific country and transaction, just like third parties would negotiate differently in different markets. Let's move ahead for let's understand the how it will work in the case of services. So uh, again, imagine company A and company B are the same, a part of same parent group. Now company B is giving design support to company A, but all the main decisions like what to design, how to use it, and how do we modify the design, how can we make it better, all are the decisions that are the taken by, those decisions are taken by the company A. That's why we call company B is a routine service provider. Why? Because it's just following the instructions and providing the support. It's not taking any decision with respect to this services. Since company B is doing a simple job, we treat it as a tested party, which is the less complex entity, which means we check if it is a earning fair profit or not. To do that, how do we do that? To do that, we compare company B's net profit margin. That's what it earns after covering its cost, which is the other similar service provided would earn. Now we can use internal data if company B also works for the outside customers, and we can use external data if from market databases. If internal information is not available or it is not separable information, like if they are not they are not in a position to provide the segmentation, like how much portion how much cost they are allocating for the sale made to the related party and unrelated party. So if this kind of data, internal data, is not available, we'll go for the market databases. Now you might think, why do not we use gross margin in this case? Well, again, the answer is the same. Gross margin can change a lot depending on how costs are grouped. Some might call something direct, other call it indirect. Same. Even small differences in the work done can change the gross margin, because in some of the cases you are performing some additional functions, so definitely you are going to charge extra. We do not know that classification, that's why. But net margin is a steadier and it gives the clear and fair comparison. So to keep these things reliable, we test net margins when it comes to routine services like this. Now let's understand. Like this is the same scenario scenario will be there, but different little bit there will be change in the type of services. Then how it could change? Let's look at that. So let's now look at the case where company B is providing technical services, but it is in a nature of research and development services. So the same thing is they are providing technical design services, but it is a kind of company A is a manufacturing entity which is trying to develop some unique product. They are trying to develop the unique product line. For that, they are requiring the design. So lot of research work will be there, technical skill will be there, will be required to perform this work. So in this setup also company A is a service recipient which is the one making all key decisions and controlling the directions. Controlling the directions like how do we conduct the research and development at company B. Now, so company A will be the, because it will also keep the results. I mean, product and all, whatever is getting developed will be the kept by company A, because they are going to develop the product and they are the company who is going to manufacture and sell. So after the development, whatever the result is there will be kept by company A. And again, in this case, company A will become the more complex entity. So that's why company B, which follows the instructions and provides support, though it is the research and development, which is the high value, high end services, you can say that this will be treated as a tested party. Now here's the key difference. This is not a basic service. R&D usually involves high skilled professionals. It could involve specialized tools, laboratories, or anything that could specialize things it can have. Then it could require scientific or engineering expertise, or you can say the highly technical knowledge it could require. So even though company B is the tested party, its work is high in value. That means, unlike routine service provider, it should get a higher markup because it brings technical knowledge and real value to the table. In short, more skill and effort equals to more markup. To help you understand the practical side, my colleague EP will now take you through the TP disclosure from step by step. Over to you, EP.
Thank you, Asta. So it is the time to practically see how do we fill in the TP disclosure form. Asta, can we see the next slide? As we discussed many times in our earlier session also, and Kinjal just discussed the threshold limit to whenever we require to basically fill TP disclosure form. So the first criteria is that the aggregate value of transactions with related party exceed AD 40 million. So when you start filling your corporate tax return, an option comes, which basically you can see on the screen. The first option asks you whether there were any related party transaction in the current tax period. You have to click on yes. Then the second question is that did the transaction value of all transactions with related party exceed AD 40 million, which is the threshold limit to file to fill in the TP disclosure form. If you click on yes, an option automatically comes up, which you can see related party transaction schedule in the blue box. Then you need to fill in this schedule. Asta, can we move to the next slide? Yes. So in this schedule, related party schedule, we need to fill in two basic information. First, information is about gross income received from related parties. The second information is about expenditure incurred to related parties. And the third tab is for the summary table, which I will show you in the ensuing slides. So firstly, taking the gross income received from related parties, we have to provide these details which are being shown on the slide now. So we have to provide the name of the related party, the transaction type. Here, transaction type means the different categories. So while going through the threshold limit, that 40 million plus 4 million threshold limit applies. 4 million limit is for category, is a particular category. So category can be services, goods, asset, liability, interest, loans, and others. You have to select the category to which the particular transaction belongs. Then you have to provide the tax residence of the related party, then tax identification number if available, then the transaction amount of that transaction, and arm's length value of that transaction. Also, you have to provide the method you applied while arriving at arm's length value. If there is a difference between arm's length value and gross income, a tax adjustment amount will be auto-populated in this tab. You have to simply add up all the transactions which are applicable as per threshold limit. Then we will move to the expenditure part. Astha, can we see the next slide? So these are the transaction types which I discussed in the previous slide, and these are the transfer pricing method applied, which comes into that option. Astha, next slide, please. Yes. So this is the second tab which comes under related party schedule. We have to also disclose the transactions related to expenditure paid to related parties. So the data set is the same as we saw in gross income. Just there's just a difference that we have to provide expenses value instead of income side value. And here also, if there is any difference between expenses and arm's length value, and tax adjustment amount will be auto calculated and shown here. You have to just add, disclose all the expenditures transactions in this tab. Ask the next slide, please. Then there is a summary table, which basically gives you a bird eye view of all what transactions you have disclosed in this particular form. As you can see, on one side, there is a column for income. On another side, there is a column for expenses. So here you can see the aggregate value of all the transactions from income side and expenses side, that too category wise. Then, Asta, can we move to the next slide? Yes. So now comes the transaction with connected parties. As we all know that we have to disclose the transactions with value of value which exceeds AED 500 million. So the first option which comes in the corporate tax return is that were there any transaction with connected person in the current tax period? Then it asks about did the value exceed AD 500 million, 500,000? If you say yes, then again a button comes up. It asks you to provide connected person details. When you click on that connected person schedule button, it automatically takes you to another tab. Asta, can we go to the next slide? This is the tab which requires you to put the information regarding connected party transaction. You need to put the name of the connected person, the corporate identification number if available. Then you have to provide the nature of the transaction, whether it was a payment or benefit. Then you have to provide the description. In our case, we have provided director remuneration. You may provide the exact description. Then again, you have to provide the value and the market value of the services provided by the connected person. Again, if there is a difference between the value and the market value, then an adjustment amount automatically comes up. In this way, you can fill up all the transaction in connected parties schedule. Now that we have seen that how to fill in TP disclosure form, now Astha will walk you through the local file. Over to you, Astha. Astha,
Thank
you
you,
want to
Iti,
know?
for okay. Thank you. Thank you, Iti, for explaining us how to do we going to file the disclosure form. So let's look at the local file. So let me just quickly walk you through the content of local file. what should be the ideally it should cover the transaction related details. So let's just first understand that, and after that we'll have a look at the local file. So to quickly walk you through the table. So we'll start with the section 1, which is the introduction and executive summary. This will give you a snapshot of what report covers and what are the key outcomes. So it will have information regarding summary kind of information for each related party transaction. So it would contain the tabular format data in which what are the transactions that has been common transaction has been entered into during the year, what is the tested party, what is the method that you have applied, and what is the arm's length result, and whether any adjustment is required or not. So this kind of a summary is required to be prepared. Section 2 focuses on the group and company overview. Here we will explain the structure of group, the roles of each entity, and how they are connected. This is required because there are chances that multiple transactions that are going to occur between the multiple group entities. So group overview is essential, and company's overview with respect to what are the functions that they are going to perform. Now in section 3, we would provide the industry overview to set the context and understand the broader market in which business operates. So you will think why industry overview is required at all. Industry overview is required to build a story, to build the, like, if you're this is the overview, like this is the overall industry is performing, and in this industry we are also the part of that industry, and we this is how we are performing. So this is an essential part which we should not avoid. Then move to section 4, which is a functional analysis, which is often called as FAR. Let's break it down. This is the heart of the transfer pricing report. It's usually the theoretical format, you can say that, but this is the theory that you need to build upon. This is the story for the international transaction that you have entered into. So for each type of transaction, you should have a separate FAR analysis. So what is the FAR analysis? It is into 3 parts: functions performed by the each entity, assets held for while performing the transactions, and what are the risks assumed by the each entity while performing the transaction. So FAR analysis is required for each and every type of transaction. You cannot use the common FAR for all the type of transaction, because this is the engine for your transfer pricing train, you can say, which will drive the pricing. So this will help to understand who does what and what takes on what level of risk in the group. In next section 5, we will perform the economic analysis, which is known as the benchmarking. This includes the selection of tested party. Like this, we should provide the analysis why we have selected particular party as a tested party. Then which method we have selected as a most appropriate method to describe our to benchmark our transactions. Then search process, which is like finding the comparable companies, selecting the right profit level indicator, right? Like we have said, gross profit margin, net profit margin. So we have to provide analogy for selecting particular profit level indicator too. And finally, arriving at the arm's length range of results using the data set of comparable companies. Lastly, in option like in section 6, we will provide appendix where we will all keep supporting details, data sets, and extra documents. Let's understand what could be those data. So we have provided the search, we have performed the search process. So we should provide a snapshot of search process. Then what are the accept reject metrics of that company? Like what are the data we would have like if this is let's just understand from a bird eye view. Like we will arrive some of the companies after performing the search. So what are the criteria based on which we have accepted particular comparables and rejected particular comparables? So that accept reject metrics should also part of your form part of your appendix. Then what are the business description of the selected comparable companies? Like they are, we have to provide such data. So in case in future if you have any internal internal discussion or audit process going on, it will help them to understand your transactions in a better and aligned and structured manner, so that it's easy for you. So let's look at the local file. We'll just have a look at this. Like the main view, like we are going to see is the benchmarking. How do we conduct the benchmarking? So let's go. Is it visible? No.
No, Asta.
Okay, let me just share again with this. Okay. Is it visible now?
Yes, it is.
Okay. Let's move ahead. We'll go to the we will provide the executive summary. As I said, in this case there are multiple transactions are there, so we will provide for each company like that what is the transaction, tested party, nature, and what would be the ALP and recommendation. So those are the key criteria that we are going to provide for. Let's move ahead. This is the corporate background. Here it has been termed as a corporate background, but it's a company overview and group overview, you can say that. So this is these are the kind of structure and all, relationship structure, then what are their businesses and all, those are the details that will be covered. So for client confidentiality purposes, we have just marked it as a, we have highlighted as a blank. Then comes the economic analysis. So as we saw that in benchmarking, what will be there? Selection of tested party, like why we have selected, we have given the snapshot of that. Then evaluation of transfer pricing method, like why we have selected any particular method for this transaction to evaluate those. Then again, each method, why we have selected any particular method and rejected any other method. So we have to provide explanation regarding that as well. Then database also, like why we could have internal database, external database. So those are the details that we are required to provide. Let's go ahead, which is the most important part that I want you to all to go through. So this is the search process. So here in this case, this is the labor supply services. So for that, we are using the S&P Capital IQ database. So how do we do this? So we will perform a search strategy. So how it is going to, like how we have performed. So we have to provide this brief description about it. Like we have seen the nature of nature, features, and characteristics of a company, and what are the services that they are going to provide, and which region we are going to see and check for our comparable companies. So those are the details that we are required to give. So these are the qualitative and quantitative word that are going to derive at the search strategy. We'll go ahead and we'll see how we have. So your labor supply services. So for that we have looked at the region, like for specifically if you go for your UA region, you'll not find that much of a comparable. So we need to broaden our jurisdiction and geographical location also. So for that, we have performed search with respect to EMEA region, that is the Europe, Middle East, and Africa region. So now in database, what are the, like how we have classified? So those are the how we have classified this kind of a services, similar kind of selection that we have to make. Then US SIC code, which is the classification of the services and all. We then what are the geographical locations that has been performed. Then ownership and holding, like to identify the independent comparables, and we do not get the comparables which are also under the influence of related party transactions. So in order to remove those comparables, we have applied this filter, company ownership and company holding. Then company should be operating in status. So these are the you can say that qualitative filters that we have applied. Some of the quantitative filters we have applied, like if no database is there for some of the years and all, then we need to exclude those companies, because we have to have the database for all the 3 relevant years. And if there is a no revenue or the negative revenue or consecutive loss filter, these are the technical terms. But yeah, just to go run you just to make you understand, it's just simply we are going through. So these are the kind of similar kind of filters that will be applied. So no matter what database you are using, these filters will remain same. It could be like just a presentation could be different, but it will be the same filters that you are going to apply. Based on that, we have analyzed the 325 company at last, and from that we have selected around, you can say that 47 companies. So these are the range net cost plus margin, that is operating profit by operating cost. We have selected as the profit level indicator, and these are the weighted average and all this range we have arrived at. So we have to provide this discussion, and even in annexure also we have provided. Then similarly, there is another transaction. So it will have same kind of a search strategy. Just in case of a interest rate benchmarking, it will be little bit different. So I'll just make you run through that thing. So it will be little bit difficult, little bit different in this case. So credit rating, how it will have. Then what is the credit rating? What is the currency and currency? Then what is the active tranche? And those are the details that we are going to have, and it will give us the kind of a, it had given 1,000 around loan agreements. Then we will going to analyze those and apply further filters. So this is the filters that will majorly remain same irrespective of the databases that you are going to use. And based on that, again, we have arrived at the range, and according to the credit rating of the borrower, we have adjusted and arrived at the well interest rate range. So in this manner, this is how it has been conducted, and this rest of the TP study is the same, or benchmarking report, whatever you call, is the same, because more and more transactions will come. So that is it from my side. uh, we are now done with the overview of local file. Over to you, Kinjal.
Can you quickly bring up the slides? And before you do that, I just want to know how many pager was that local file?
This is a quite small one, so it is around 50 pages.
Okay, so I just want audience attention here. Astha mentioned it was a small one, and then she mentioned it was a 50-pager document. So this is the level of detail which goes into a local file. And as I mentioned, it's not just about the local file maintenance and the threshold limits, but what it is about is that local file or any document which demonstrates your ALP is as good as your local file. And if she's saying a smaller document was 50 pages, you can imagine how lengthy would a local file be. And then FTA would provide you 30 days to give that local file. So by that logic, if you have to sit and compile everything in 30 days of what the local file contains, it would be next to impossible. So yes, that is something which we wanted to bring to your notice, that this is an extensively detailed document which would need to be maintained to make sure that you can demonstrate that your transactions are at ALP. We've seen how the transactions are benchmarked, what are the typical type of transactions. Three typical questions which I get to listen from every other person. I would like to cover that. One is, what softwares are you using for benchmarking the transactions, right? And what kind of results they are giving. So there are typically three softwares which are there: S&P Capital, Orbis, TP Catalyst. S&P Capital is the most commonly used software because of two reasons: cost effectiveness as well as reliability of data. So most of the transactions are benchmarked using S&P Capital. Second question which we get is, so do you limit your search to UAE region? Because what they see in our benchmarking results is that there is every other region except the UAE region. So the reason for that is that TP is really new here. The data is not that readily available. And the good part about it is that the federal tax authorities recognize the fact that data would not be so readily available. And therefore, in the transfer pricing guide, they have specifically told that in case you cannot get data within the region, you can expand your search to the regions where you feel that the data might be comparable. So generally, any document which you see would have MENA region comparables. If we don't get UAE data, we expand our search to GCC. And if GCC is also not able to produce the reliable data, we go to the European regions. And that is fairly acceptable. And the third question, which we typically get, is not all times you will find the exact match of your industry. So in that case, you are left with no alternative but to expand your search a little bit to have the similar classifications which you can get. So in that case, that is absolutely acceptable. Every one of us has to go down through this acceptance phase that transfer pricing is new and it would have, and there are no precedences. There are no precedences. So most litigative matters which are there throughout the world are in case of transfer pricing because of comparables, right? So there are enough precedences in mature jurisdictions which can help you with getting the reliable comparables, reliable data. But in this part of the region, that's not the case yet. And therefore, in the first year, in the 3 years, it is okay to have your searches broadened, to have something which is comparable. At least you are trying, at least you are not having anything. So doing something is better than doing nothing. That is something which I wanted to highlight to you all. And I think the next slide would be of a Q&A, Asta. Great. So I think there are a few questions in the chat box which we can answer. In case of search for comparable companies, if we can't get any data in UAE, can we take global data like ours in jewelry business? Can we take global published data? Asta, do you want to take it up?
Yeah. So as Kinjal said, in UA region, it's a new region, will not find the data. Like it's not publicly available. So we are required to expand our search. So usually we should expand our search to the MENA region. If it is not available there, that is Middle East and North Africa region, we can go beyond that and we can include the EMEA region, that is the Europe, Middle East, and Africa region, to derive at the number of comparables which are the quite fair comparable. Next question.
One thing which I would also like to clear for visas. So we had covered that in our previous session, but if any entity is having visa on behalf of any other entity, then we need to look at what is that entity's core business, the one who is issuing visas. If it is not visa processing or if it is not doing it very commonly, if it's a one-off thing, then it's okay. You can reimburse that visa cost straightly to that company and the matter is closed. But if so, for the first year, what you can do is you can do that. And next year, you can transfer that employee in the company for which it is working. So ideally, the visas are supposed to be from the companies where the employees are working, right? So you can assume that there can be a breather of 1 or 2 years until the visa expires. But going forward basis, if these practices are continuing, then it is advisable that you keep the visas of the employees in the same company where the employees are working. And then you can justify it easily that, okay, this was something which was done in a pre-tax era, but when we are in a post-tax era, we have considered it and we have corrected it. That would give you a strong demonstrable case. Another frequent question which we get more often is that for how long are these benchmarks valid? Because we realize that it does involve a cost and it does involve a good cost, right? When we are getting anything benchmarked. So as per the transfer pricing guidelines, the benchmarking results are valid for a period of 3 years. But it is also mentioned that you need to do a check every year to see if there's anything which has happened which can change those benchmarking results. So everyone has to be mindful that you have a 3-year period, but every year you would have to make sure that you at least go and revisit those benchmarking results to see that nothing has changed which would change that benchmark. No assumption has changed, no understanding has changed.
Now let's take the question of Deepika. So she has mentioned that a company in Hong Kong and there's a company in Dubai. They are the related party, and Hong Kong company is selling products to the Dubai company, and Dubai company further processes and sell to customers. So now I'm assuming it's the end customers that they are going to, because it's a case specific exercise. Now, company this will be treated as a related party transaction, and Hong Kong company is not selling the same product to the unrelated party. So, ideally, in this case, type of scenario, we will treat the simpler, less complex entity as a Hong Kong entity, and we will see the how comparables of Hong Kong company are going to, like, we will see the search of that region, and we will see that how those comparable companies are deriving the margins in that region, and whether those margins and PLI that we are going to select for this Hong Kong entity are falling within the range or not. So this much at this point of time, with this level of information, I could answer this question, this much only, because it further questions like it will require more details.
Correct.
Now to
There's a
answer,
question which Bhumi has asked.
yeah.
Director's remuneration is 420K for a company with 100 million turnover. Does it mean it still needs to be benchmarked even though the threshold mentioned on the FTA portal is 500K? Director is 100% shareholder. Okay, fair enough. So here, first of all, I would again like to re-clarify the myth. There is a difference between what we need to report and what we need to comply with. What is mandatory is that we comply with the arm's length principle. Now, when we say you comply with the arm's length principle, then what it will warrant is a benchmark to support it, right? And when we are saying it would need a benchmark to support it in case of a remuneration, that can generally be the quotes of the HR consultancies with a person with a similar qualification as this director has. That is compliance. The next step is reporting. So yes, Bhumi, you are exempted from reporting because your remuneration is 420K, but that does not mean that you are exempted from benchmarking. You would still have to do that benchmarking, and you would still have to make sure that 420K is within the range. It might be within the range because your company's turnover is 100 million, but there's also a possibility it might not be. So that is something we cannot comment on. That would depend on the qualifications of and academic and experience wise of the director. But you are definitely not required to report it, but you are still required to benchmark it.
So just to answer the Summit question, so he has asked that interest on shareholder loan is at ALP. Is there anything that need to be keep in mind while considering the corp tax return? So, like, just to give you a briefly idea regarding this, we need to see the interest deduction limit also in this case. But to further, we are coming up with the corp tax return series, so we will take this kind of question to answer.
Is it possible to get the highlighted local file presented here for our reference? Unfortunately, no, Vikram, we cannot share that, but we would be happy to help you and guide you with whatever is required or any clarifications you need with respect to that. You can reach out to us offline. What about performance-based employees? Example, real estate marketing sales, their income fluctuates based on the commission on sale of units. How do we benchmark this? So the first question, Didi, I think that's someone called as Didi has asked this. So the first question, Didi, you need to ask yourself is, are these employees your key managerial personnel? Are these employees someone who are making a strategic decision for your company? If the answer is yes, then you need to go ahead and look at the benchmarking results. And yes, the benchmarking can include your bonuses, because it does not say salary, it says payments to KMP. So your benchmarking can include bonuses, which can be based on the performance of the employees. But generally, performance based employees, in your case, it seems that they are marketing and sales routine level of employees, which might not always necessary a benchmarking. But yes, if you think that they can be classified as KMPs, that is, it is marketing and sales head, in that case, I'm sure the employment contract would also have some terms for providing bonus to that employee, and you can do so. Bonuses are something which are very much common in this part of the region, and you can make that as a part of your benchmark.
Another question is from Samit. So he is asking, does managerial remuneration have to any link to restriction to 10% of net profit, or only benchmarking to HR search is what FTA? So as we all know that UA region is a new to the Corptex. Now for assessment and all this are not yet started. And again, another thing is that there is no official guidance or document has been provided by FTA regarding what could be their allowance or disallowance. So what we are following approach is the independent report from the HR consultancy. So now let's see that how FTA is going to look at those transactions, because there is no precedence in other jurisdiction also.
There is a question for sponsorship fee. So, Vaibhav, if I'm correct, what you mean is that you have a local partner with whom you have agreed a sponsorship fee, and so that person is a sleeping partner. And generally, this is how it works. There's no key role which the sponsorship sleeping partner has to play in such a cases. In that case, you need to see that do you even need to benchmark it, because if it is sponsorship fee and that sleeping, so generally your articles of association would have a clause which would state that that sponsor is entitled to 1% or 2% of the profit. In that case, it would really need to see, can he be classified as a key managerial personnel, because what we have generally seen is that sponsors do not have an active participation in the day-to-day businesses. And therefore, if that is the case, then you do not need to benchmark it. You can have it as per your articles of association. But if that is not the case, then you would have to go and benchmark it. I think mostly all the questions are covered. In case we have missed any question, I would request you to please uh, type your question again in the chat box so we can take it up. In the meanwhile, can you just display the QR code of our community, Asta?
One more thing, feedback. Please do provide
Yeah.
feedback. Please scan the QR code and just
Yeah, can we
provide.
request everyone to just scan this code and provide us a feedback? So, this will really help us and improve our next sessions and target what is relevant for you all. Please spare a minute to provide us a feedback. And I would request everyone to stay tuned because I have really some news for y'all. So please stay tuned with us. Don't assume that the session is over so y'all can leave. Please, we'd request your participation for another 2 minutes. Can we display the next code, Astha, for joining our community?
Sure.
Yeah, thank you. In the meanwhile, the feedback form is in the chat box, so please feel free to access it. And we do run a community where we are committed to providing regular tax updates, not in a boring form, but in an analogy form which everyone can relate to. Our mission has always been to keep the uh, subject simple. So please go ahead and scan the QR code and join our community, be a part of us. And lastly, can we have the next slide, Asta? Can we bring up the next training registration code on the screen for everyone? So what we are doing is we are having another training next week on the most relevant topic which you all can think of, which is the CT returns. What we want to do is we want to demonstrate a live CT return for all of you. And therefore, we request you to join us in the next training. So would that be okay if we project the QR code of the next training so that you all can register now itself and join us next week while we do the CT return live demo? We are just bringing up the code. Allow us 1 minute.
Is it visible, Kinjal?
Yes, it is. So please feel free to scan and register for the next week's training. What we are going to do is we are going to run you live through through the corporate tax return. For most of you all, the return filing due would be in September. So please feel free to join us next week so that we can take you all through the return. And in case we have missed answering any question, please feel free to reach out to us. We will be sending all the presentations as well as the recording of the past 4 sessions shortly to you all. So you all can refer that. And if any questions, please feel free to reach out to us. With this, we end our fourth series of the transfer pricing webinar. We hope that we have made justice to it. But yes, in case you all have anything, any doubts, please feel free to reach out to us. We are there to help you all. And please await. We'll send the presentations as well as all the recordings without any technical errors shortly. Thank you.